Give a little introduction, Mr. Abhishek. So Abhishek is working as a business analyst in Trade Genie. So he has a lot of experience with trading analysis, and he done a lot of webinars earlier with a lot of other companies. So today we'll be discussing a lot about types of orders and Nest Plus API. So hope you'll be having a very interesting session. I'll hand over to Mr. Abhishek. So here, Abhishek, yeah. And the questions, what are the questions? You post your questions, everything. So everything will be answered at the end of the session, right? So Abhishek, it's your time.
Good evening, guys. I'm audible? Okay, good. So we'll start with the PPT. So if you see the types of orders that we'll be discussing today will be market, limit, bracket orders, covered orders, stop loss order, and spread order, or in other words what we call rollover order. Plus in we have seen actually there are two kinds of leveraged order also, like NRML and MIA. So we'll be talking about this too also. So let's start with what we mean by bracket order. In bracket what we do is we try to bracket something. So in this we limit your loss and lock in your profit by using or by bracketing it. So normally we have two kinds of order, a buy order or a sell order. So a buy order is bracketed by a high sell side limit order and a low side A sell order is bracketed by a higher side buy stop order and a lower side buy limit order. Now if you see from this example, you can have a fair idea about what we exactly mean by bracket order. So suppose Ravi, he wants to sell 1000 shares of ABC company at rupees 24. So what he does, he enters a limit order at 24 and his order gets executed at 24. So as we know, a bracket order is a bundle of two orders, one for the purpose of taking profits and the other will have the objective of minimizing loss. So it will have a sell limit at 26 with a sell stop at 22. As the bid price of ABC company goes up to 26, Ravi's sell limit order will be executed. And once either of the two is executed, the other will get automatically cancelled. This is an example for the buy side or a buy bracket order. Just opposite of that happens in a sell side bracket order. So in this case, Ravi is selling 1000 shares of XYZ company. Now it is bracketed by a buy stop. In case if the price starts going up, you'll get into losses. So a buy stop loss, and it has a buy limit. The objective of this buy limit is to book the profits. So once the buy limit is executed at 22, this buy stop will be automatically cancelled. In this way, the buy limit order is executed. So after this is done, when once happens, the other gets cancelled automatically. Guys, you can hear me?
I think it is audible. It's audible. We'll just continue.
So after finishing the PPT, we'll try to go into Nest and just see actually how it works in Nest. So we'll see the Nest order system also. Next will be covered order. The major difference between covered order and bracket order is in a bracket order we send a limit order, either a limit buy or a limit sell, with a target and a stop loss. So it is a three-legged order. Whereas a covered order is either a buy sell with a compulsory stop loss. So it is a two-legged order. Covered order is like any other market order but placed with a compulsory stop loss. The initial order is either a buy or a sell, and it's always market order. Covered order will be always market order, whereas in bracket order we send a limit order. In covered order what happens? A stop loss is mandatory for the trade. When we place the trade, we have to enter a stop loss. And when we enter a stop loss, the risk reduces, and because of the reduced risk, the margin required to execute covered orders are also less. So this is how the covered order will look in a nest screen or nest trade genie nest trader. To place a covered order, we can either click Shift F1 for buy or Shift F2 for sell, or we can go to order and trades and then select cover order from there. Now in this example we are talking about a buy cover order. So here Nifty is selected. The initial first leg buy and sell will be a market order. In this example it's a buy market. Now with every order a trigger price range will be given based on the maximum percentage. In this example the range is 8659 to 8791 and the maximum percentage allowed is 1.50 for Nifty. So we have to enter the trigger price which is 8660.15. So if Nifty comes down to 8660, it will be squared out. So we'll have a fixed percentage for Nifty, Bank Nifty, that way. So we have to put a trigger price between that percentage. And because in this the maximum percentage is 1.5, so our margin will also be calculated on this 1.5%. Now, one more thing I'd like to add, for different cover orders, like for different stocks, this maximum percentage will also vary. Now, spread order. It's also a very important tool, majorly can be used for rolling over your position once. Like suppose you are long in a stock and the expiry is nearing. So what you want to do is you carry on with the long position or the short position, then spread order comes into play. So what happens initially, like before, we have to manually go and exit a buy position, long position, and then again we have to go and execute a long position in the next month. In this, out of a single order, we can exit our previous position and go long in the next month. So a spread order is a combination of individual orders, legs that work together, creating a single strategy. Now, spread types includes future spreads, combination of option stock, or same or multiple underlying. So using this, how we place a spread order? We go to order and trades, spread order, control shift F1 for placing the order. Now, in spread order, what we can do is we can also use it for pair trading. In a sense, we can buy zinc, sell lead, buy ICICI Bank, sell Axis Bank, also using the same spread order. So when you click on spread order, the next window that pops up will be looking like this. So over here you can see order type. We have SP or spread. Then we can have 2-leg, 3-leg. So over here in spread order, the maximum we can have is a 3-legged order. Out of this, we can again create option like 3-legged option strategies, butterfly, condor, and all. Like buy at the money, sell, buy out in the money, sell 2 at the money, and again buy 1 out of the money. So this kind of trades can also be executed. So order type, SP stands for spread. This kind of order is generally used to roll over positions for the next month or to trade specifically calendar spreads. What do you mean by calendar spreads? Like the Nifty current month, say August and July. The difference between July and August is 40 points. So what people believe, at the end, the starting of the month it is 40 points, maybe at the time of expiry the spread will come down to 20. So there are people who buy July and sell August. So that is also possible out of this. Second order type is two-legged and three-legged. This order placement tool can be used to trade pair trades or specifically pair trading, where you select like two different stocks from same sector, Tata Motors, Maruti, ICICI Bank, Axis Bank, or trading complex option strategies which uses multi-leg position like butterfly, condor. All these kind of strategies can be executed using a spread order. Now one more tool that is there especially with next is stop loss market order, which is nothing but a stop loss order with the absence of this trigger price. In stop loss market order, we don't have to enter any price. We have to only enter the trigger price. In normal stop loss order, we have to enter a price and a trigger price. In this, in a stop loss order, after the trigger is achieved, it goes as a limit order. So in stop loss market order, what happens? The moment trigger price is hit, it is sent as a market order, which has a much higher chances of execution than a normal stop loss order. In normal stop loss order, what happens in a time of when market is moving up very sharply or it's falling very sharply, there can be chances when our stop losses get jumped. But in a stop loss market order, what happens? We only put a trigger price. There, it is very less or remotely chance that our orders may not get executed. Now, market order, as we all know, it's an order that a trader makes through a broker or a brokerage service to sell an investment immediately. In this, we don't try to find out a better price for us. So it's like we are very sure about the trade and we want to get immediately into the trade, whether it's a long position or a short position. So the price is not that important. It is for us to get into the trade is more important. So at those times, we normally tend to use market order. So a market order is the default option and is likely to be executed because it does not contain any kind of restriction on buy and sell price or the time frame in which it has to be executed. So Nifty is trading at 8,000, you put a market order. Whatever available bid and ask is there, based on that it will be immediately executed. The execution will not be delayed. This is what normally market order goes. Limit order. In limit order, we tend to find out a better price for us. So suppose market is trading at X, we wanted to enter a trade at a price which is better than X. So an order is placed with a brokerage to buy or sell a set number of shares at a specified price or a better price. So in this case, getting into the trade is not more important. It is more important to get the better price. Because the limit order is not a market order, it may not be executed. If market is not giving us that price or it is not, the LTP is not matching our limit price, it may happen like in a case that we may not, or our order may not be executed. If the price set by trader cannot be made during the period of time in which the order is left open. Now, on this, we have something known as the auto trading tool through Nest API, which will be again taken care by Rajendra. Will be talking on this. Whatever questions you have, just make a note of it. After the seminar is over, we'll sit and elaborately try to answer those.
Thank you, Abhishek. So when it comes to auto trading, currently, I mean, in markets there are two types of algo trading is there. One is done using an semi-automatic trading, and another one is a fully automatic trading. So semi-automatic trading is generally for retail traders, and fully automatic trading is generally for dealers. So if you want to do any kind of fully automated trading, then you need a dealer terminal and need a dealer certification, and you have to register with the exchange as a dealer, right? And when it comes to semi-automatic trading, which is generally NSE's, the exchange is allowing normal retail traders to place a semi-automatic order. What does a semi-automatic order means? The semi-automatic order means when we can use some kind of logic generating softwares like AmiBroker. Currently, AmiBroker is predominantly used in India, and we can create or buy and sell logic in AmiBroker. And there is a plugin in Nest. It is called Nest Plus API. So it is on mostly on subscription basis. We have to subscribe with Omnisys. I mean, Omnisys is the one who is providing the white label solution for brokers, and we have to subscribe to Nest Plus API. It is available on monthly basis subscription, and we have to get a Nest Plus API plugin, and then using that plugin we can place orders from AmiBroker to your Nest trading terminal semi-automatically. Semi-automatically in the sense, whenever there is a buy and sell logic is generating, it will be automatically sent to your Nest trading terminal, but Nest trading terminal will ask for a confirmation. Whereas in fully automatic trading, there is no human intervention is there. So whenever there is a buy and sell signal is generating, probably it will automatically end without any human confirmation. And in semi-automatic, exchange says only limit order is allowed and the market order is not allowed. And you cannot modify or place market orders using AmiBroker. I mean, currently the Nest Plus API itself not supporting market order or modifying the orders because it is a exchange regulation put on to limit the traders' functionality. So basically, the exchange don't want retail traders at this point of time to take more risk in the market. Maybe in the future, exchange may allow fully automatic trading once the whole trading environment, traders environment get evolved and everyone want to participate and everyone have a sophisticated knowledge in algorithmic trading. Probably exchange might allow fully automatic trading to the retail traders. But at this point of time, yes, I mean only semi-automatic is allowed, and not every brokers you can place algorithmic trading. As of now, when it comes to semi-automatic trading, all the Nest trading terminals and most of the now trading terminals are allowed, and brokers, from the broker side, they have to enable the algorithmic trading functionality. They have to place some X amount of money as a base minimum capital with the exchange as a deposit, security deposit, so that I mean the brokers will be allowed to allow their customers, the brokers can allow their customers to place semi-automatic order, right? So so Nest Plus API, so how it functions. So basically, when you want to place semi-automatic order from AmiBroker, there are 4 components is required. One is an AmiBroker. AmiBroker is a charting analysis tool where you can write your own buy, sell, short cover logic, right? And the next one is you need an Nest Plus API. The Nest Plus API will be sitting at your Nest trading terminal and it is available on subscription basis. And the third component is your JDFL Nest trading plugin. Means I mean you need an plugin which communicates your AmiBroker buy and sell signals to the Nest Plus API. I mean it is like Nest Plus API generally doesn't understand AmiBroker logic, so we need to write an code in AmiBroker which understands Nest Plus API. So generally, I mean there is a provider, Global Data Feeds. They used to provide a Nest Plus trading plugin. So whenever there is a buy and sell order is there, this Nest Plus plugin will communicate instantly to the Nest Plus API, and Nest Plus API instantly places the order in the exchange, right? And these are the Nest API charges. So Omnisys is currently charging 295 rupees per month, and these are the other charges they used to charge in quarterly, semi-annual, and annual. Earlier, sometime back, they used to I mean, a retail trader can directly approach Omnisys. They can tell their Nest trading terminal ID. I mean, this is the ID which is basically the broker provides to the retail client. But these days, Omnisys says like, I mean, retail traders, you contact the brokers, and brokers in turn enable the facility for you. So brokers are the main point of contact when you want to enable your Nest Plus API plugin in that case, right? So there are 4 components required, as I said. One is AmiBroker, another one is data feed for AmiBroker, and another one is the plugin or the bridge, which I said the global in the previous case it is an global data feeds Nest trading plugin, and another one is an Nest Plus API. So the 4 components are the mandatory components if you want to trade semi-automatically, if you want to pass your orders semi-automatically. And when it comes to semi-automatic, you cannot execute bracket orders or cover orders. The cover orders and bracket orders are mostly of an intraday orders, where which you can use only in a manual order punching. Whereas when it comes to algorithmic trading for retail traders, yes, only market orders are allowed, right? And Abhishek, I will have a couple of questions to you. When it comes to a bracket order or a cover order, what is the margin the brokers are giving generally?
For covered orders, it will be based on that percentage. Suppose on that, suppose the percentage is 2.5. So that is the maximum percentage. Suppose the client, when he is entering, it's around 1.5%. So based on that 1.5%, the stop loss amount of stop loss he has put. So based on that, the margin will be blocked.
Okay. So generally, they can get on 30 to 40 times.
Yeah, easy
in case of
30 to 50 times would be the normal leverage possible. So it's more of an internet.
This is in case of a bracket order or a cover order?
Cover order.
Cover order. Okay. How it is in case of a bracket order?
Bracket order again, it will be little bit higher than that, but still it will be leverage of around 25 to 30 times. You can easily expect that.
Okay. So and what I see is an bracket order is also called as an OCO order.
Right.
So what does an OCO order mean?
OCO stands for one cancels another.
Okay.
So what happens is, see, in a bracket order, what we are doing, trying to do is we are entering a trade.
Yes.
So the objective of entering a trade is to make profit, right? But it may happen that the trade goes against us. So obviously there is a need to protect us from losses also.
Okay.
So in a bracket order, we have a target profit set, a profit target set, and at the same time we have a stop loss set.
Okay.
So what will happen in either scenario, either of the two will be achieved.
Okay.
So either we'll be hitting a stop loss or we'll be achieving our profit target.
Okay.
In either of the cases, if we are hitting our target, then the stop loss will get cancelled.
Yeah.
Or suppose we are hitting a stop loss, then the profit target.
Generally, one order will cancel the another order if either of the target or the stop loss gets hit.
Right. Exactly.
Okay, great. And another question is, there is a feature called in a bracket order there is an trailing stop loss works, right? So how it works?
See,
and how it is useful for a trader when a trader has to trail the stop loss.
See,
why a trader has to trail the stop loss? They can use the stop loss level.
Right. See, stop loss anyway, as we have discussed, is to protect us from if suppose the stock or the trade goes against us. It is only a tool to protect us. Now, suppose we are entering a trade, and then for some time the trade is going in our favor.
Okay.
Now, in that process, we have, like, our trade has gone into profit, but suppose after that it comes back all over, it traces back, and then we exit a loss. So in trading, what happens? We tend to, as we start making small profits, we tend to capture those profits or protect those profits. So in trade, what we do is, suppose in bracket order we are putting a stop loss of maybe 5 point or 2 point. Means at any scenario, suppose Nifty is moving up by 5 point. So we are putting a stop loss of trading stop loss of 5 point. Every time Nifty moves up by 5 point, our stop loss is also automatically changed by the tool.
Okay.
5 points above or 5 points below in that way. So as Nifty or the trade goes in our favor, the system itself automatically changes the stop loss.
Okay. So basically, if someone wants to use an huge leverage and they want to limit their risk as well, they can go with an cover order and the bracket order. So okay, great, thank you. And another thing I just want to ask you is, how about the margin allocation? Like whether a stop loss market order will add an additional? Do we need an additional margin to place a stop loss market order? Because earlier, if you want to place a stop loss, we need to place a limit order stop loss.
Right.
So that requires a double.
That will actually require double the margin.
Yeah.
So OBR it will not require that. It will be actually less than that. Okay. So that margin is not required. In that case, what is happening? The margin required is more because two orders are going separately. Okay. And the exchange considers or the RMS considers margin for both of the orders. But over here, all three are going together, or in cover orders, only two of them are going together. So that's why the margin required will be much lesser. So that's why, because of that, it's a very easy, important tool for internet where we get almost 30 to 50 times. But at the same time, we should be also careful, because when the leverage is high, we should be more careful. And obviously, if we are doing our things properly, we are doing our analysis properly, obviously the chance of making profit is much higher.
Okay. So my another concern is, I mean, just in case of spread order, whether I am doing pair trading or if I am truly doing in multi-legged options like in butterfly or collar, or if I am rolling over my positions from current month futures to the next month futures, how my brokerage will be treated, because I am placing an order simultaneously, whether it will be considered in one single order or it will be considered in multi-order. So how the brokerage will be treated?
Okay. See, in spread order especially, over here it's only a tool to execute that. Okay. But it is not a tool by which it's both are going simultaneously. One is a buy, one is a sell. So obviously you require to pay two legs.
So basically, I mean, how many legs are there? That much amount of brokerage. So if the brokerage is 20 rupees per order, so they have to pay some. If there's a 3-leg order, then for one transaction, one placing the one-shot order, it will cost you 60 rupees.
Because it's one is buy and one is sell. So both are two different things. So that cannot be combined to a single order.
Okay. So maybe whatever maybe the size of the whatever be the quantity
in buy and sell, that will be treated as a single order.
Single order. Okay, great. And
because buy and sell are two different things, right? If you're sending it to exchange, you cannot say buy and sell orders are at the same number. That is not possible.
So how about placing a basket order? I mean, do we have any functionality to place a basket order? Like I'm an investor, I want to place a basket order. Like, so I want to purchase 6 or 7 shares at the market open. I want to purchase 7 different shares with different price. Can I place it in one shot in this trading terminal? Is it possible?
Yes, it is possible.
Okay, great. Thank you. Can we have a little demo on how to place orders?
Yeah, we can do
that. Just basically explain how to place a bracket order, cover order, and the spread order, because these are the three things people probably they want to know more about. I guess everyone is familiar with a market order and a limit order, right?
We can just take out of the screen and we can do that.
Yeah, please. So do we have a bracket order for M6 enabled?
No, as of now it is only for equity, F&O and CDS, that's currency.
Okay, so as of now M6 is, bracket order doesn't work with...
Yeah, for both bracket and cover it's only equity, F&O and currency.
Okay.
For MCX we have not received the permission yet.
Okay.
So we are on for it, but we don't know how long it's going to take. So one moment it comes, we'll be activating it.
Okay, great.
So for let's say covered order, go to the stock. Suppose we want to enter a buy covered order. So if you say the Reliance is automatically selected. Call option, strike price, whatever it is. Quantity, right? It's better we'll do it with the future, it will be easier. Now Bank Nifty. So over here you have to place the trigger price between 18,152.55 to 18,523.00. The maximum percentage is 2%. So at any case, when you are placing a cover order in Bank Nifty, the maximum amount that you are allowed to lose is 2%. So if you want also, you cannot modify it. It is fixed at 2%. But obviously, if you want, you can reduce it to 1%, 1.5%, 0.75, 0.05, whatever it is. So within this 2%, you have to put that trigger price. And then you have to submit the order. Same with sell. Suppose we want to put a covered sell. So obviously, if I am selling Bank Nifty, I have to put a stop loss buy. Again, the range is given and the maximum percentage is also given. So 2%. So even if you are selling it, the maximum percent of stop loss that you can put is 2% above that price. And based on that, you have to put the trigger price. Okay. And how you enter the trigger price and how much is the risk, based on that will be your margin block. So normally it will be around 2% to 4% of that thing will be blocked. So let's see example of bracket order. So obviously in covered orders, as we can see, we have a buy and a stop loss. So it is a two-legged order.
One minute, Abhishek. I'm able to see in bracket order there is something called absolute ticks and.
Anyway, I'm explaining now, so I'll go with that also. Now, as we have discussed earlier, bracket order has three parts or three legs. So order has three major parts. We have a buy or a sell limit, and along with that we have a target price at which we want to exit or book profit, and we have a stop loss price. And so first leg, second leg, third leg, right? So bracket, this order is bracketed by the target and the stop loss order. So this is why it is called a bracket order. So remember, in bracket order only limit is allowed. So you cannot place a market order. Suppose you want to enter it immediately, then obviously the only option is keep the price as 0 and enter, so it will be immediately executed. Now this for Bank Nifty I am putting a bracket buy order. So obviously for that I have to put a stop loss, a square of sell which will include profit. So suppose Bank Nifty I am putting a price, say 19,000. Suppose I want to buy Bank Nifty at 19,000. Now I have to put a selling order to book profit. So now LTP is last traded price, ATP is average traded price. So it is from the ATP it will be calculated from LTP. So better is from LTP, because we across for the traders we follow LTP only. Now first I am talking about absolute. Absolute means how many points. Means suppose over here I am entering 100 points. So it will take a profit of 100 points. So at 19,100, after taking 100 points profit, it will execute the sell or trigger the sell. Now, in case after entering or buying Bank Nifty at 1900, it starts falling. So obviously we have to enter the stop loss because it's a bracket order. Now, suppose we are putting a stop loss of say 20 points. So 20 points below 19,000 is the stop loss. It falls below by 20 points or it comes to 18,980, a stop loss will get triggered. Now over here, if you want, you can put trailing stop loss. In that case, suppose we are putting a trailing stop loss of say 5 points. In a sense, in this case what happens, every time Bank Nifty moves up by 5 points, this will be modified by 5 points. So in case price goes up to 19,005, this goes to 18,985. So 5 rupees it increases, and that's how it keeps on.
So stop loss will be keep on modifying.
Modifying accordingly.
Automatically.
Okay. So you don't have to do much. The next option is ticks. Ticks. In Indian stock market terms, we mean by 0.05 paisa is 1 tick. So 1 rupee will be 20 tick, right? So over here, if it's 100 over here, means it's only 5 points, right? So it's only 5 points. So over here, tick is nothing but 5 paisa. So over here, how you, so if it is 1000, 1000 by 0.5 paisa, so 20 points. So this is how tick is calculated. Same way over here. So if you have to put, you're going to put it in forms of tick. So if it is 20 tick, it will be only say 1 rupee. and then how you trail it, right?
So, Abhishek, can we go through the questions from the audience?
Yeah.
Okay. So, there is a question from Mr. Vasant Kumar. He is asking, do we have a virtual trading terminal to test our setup and mainly for the back test? So, he basically wants a demo kind of terminal. Does any of the Indian brokers providing Mr. Vasant, as of now, not even a single broker in India is providing an virtual trading terminal. And there is one more question from Rajesh Singham. He's asking, can I get semi-automatic trading terminal? Rajesh, there is no differentiation between a semi-automatic trading terminal and a normal nest trading terminal. The only thing is you need to get an basic account with a broker, and the broker has to have an algorithmic trading approval from the exchange. So that the only thing is probably a nest trading terminal or a now trading terminal. You can ask the broker, and the broker will enable the Nest API for you. As I told, Nest API is available on subscription basis, right? And there is one question from Ravi Shankar Reddy. He's asking, is cover order is only for intraday? Can we carry forward the...
No, both bracket order and cover orders are only for intraday.
Okay.
315, 320, it will be automatically squared up. So there is no positional possible as of now.
Okay, there is one more question from the audience, like they are asking, can we place an cover order in options?
In option, as of now, we are not giving covered orders. Maybe we may start, but as of now, we don't have.
Okay, only in futures and then equities
and currencies.
Equities and currencies. Currency futures. Basically, they are not coding in. It is not enabled in options. Okay. And there is one more question from Karthik. Yes, he is asking. I have a question. While trade executed in a nest trading terminal, can I get an instant SMS from TradeGenie? So, instant SMS is possible when the trade got executed?
If we can activate it, it is possible.
Okay, so that is available by default. Yeah. Okay, great. And there is one more question from Chris Denny. He is asking, can order and cover order can be present to save time while placing the order?
So there is no function for preset thing.
Okay, there is no preset thing.
No, bracket order has a limit, so you can do that. But every morning you have to open the screen, log in, and then you have to place it. There is no way to modify it every morning automatically it goes in. No, it's not possible. And cover order is anyway a market order, so there is no preset thing possible.
Okay, probably we could suggest to Omnisys preset thing so that it will save
maybe time. Before market opens only we can preset our order and then we can continue with the normal. But that is not done, not there as of now.
Okay, so Vasant is once again asking, do we need to get approval for our strategy for even semi-automatic trading? See, Vasant, only if you are doing in fully automatic trading, then only exchange is concerned about your strategy and getting approval from the exchange. So if you are using a semi-automatic trading, then you don't need to get a semi-automatic trading approval. Just get the Nest API plugin, set your AMI broker, get your data feed, connect your plugin, and just start doing it, right? And there is a question from Prashant Gautam. He says, can I have fully automatic trading terminal from TradeGenie?
As of now, we are not giving any dealing terminal.
Okay, as of now, you are not giving dealing terminal. Only retail traders are allowed to do semi-automatic trading. Okay. And there is a question from Samir Talekar. He's asking, what about partial executed orders? Say like in case of a bracket order, how the brokerage will be treated if it is a partial executed order?
To specifically answer that, suppose your bracket order buy or sell. So initially, suppose, let's take an example of a bracket buy. We are buying, suppose, whatever quantity, one lot, 500 lot, 1000 lot, whatever. The first order will be treated as a one order. It will have a single order ID.
First partial order.
No, not for partial order. So first order itself.
Okay.
The first order. We let it be broken into many parts because first is the buy order. So because it's a buy order and it's a single order ID, maybe it's partially executed. That's a secondary call. Okay, it's a buy order, so it will be only one sided brokerage.
Okay.
Because it has a single order ID. But now what happens, he's entering stop losses or is entering trading stop losses, and because of that, his other order is filled into 5 parts, 10 parts, 20 parts. So for all those 20 parts, he has to pay 20 rupees for each.
Okay.
So if it is in 10 parts, 10 into 20, 200 rupees plus the previous 20. So if it is broken into 5 parts, so 5 into 20, 100 plus the previous 20 rupees, 120 rupees. So in that way.
Okay. So I guess, Samir, that answers your question. There is also one more question from Mr. Prashant. He asked, I know it is not for retail, how can we get, so he asked, how to get, how a retail trader can do an fully automatic trading. Prashant, my answer is you need to pass a dealer certification, NASM Series 8 certification, and then you need to get a dealer terminal. To get a dealer terminal, you have to check with your broker and you have to get a dealer terminal, right? So one way is, as of now, most of the brokers are not ready to give a dealer terminal, because dealer terminal, as per exchange rules, dealer terminal has to be placed inside the broker's house itself. Right. It is not allowed to place outside the broker premises. So another legal way to do is, there are two ways. One is you have to go with a Symphony Fintech. They are a partner broker. You have to do an fully automated trading with Symphony Fintech partner brokers, and that is the one way of doing legally. That involves a lot of license fees. So probably I request you to go through the previous webinar, which we had talked a lot about fully automatic trading, right? And another thing is, there is a question from Vivek Bombay. He's asking, is it possible to trade in Nest API with AMI Broker with so-called auto trading code published by Rajendran sir directly without any other applications like RoboTrader? See, the RoboTrader, what the generic people are talking about is, there are a lot of illegal vendors in the market. So they used to use some of the loopholes in the software application and they make it as fully automatic trading. But exchange takes it very seriously, because whenever you're punching your order manually or automatically, it will be the token will be listed as what kind of order you're punching. So if you're punching an manual trader automatically in some means of illegal ways, exchange takes it very seriously. So such kind of applications are not recommended because it's highly risky. Sometimes Nest will always comes with an upgradation. So by that time, if you are holding a huge position, and you might in a feeling that your trades will execute automatically, but the scenario might be different, and the orders might not get executed because of the loopholes might be fixed by the vendor, right? So to trade semi-automatically, yes, you can go with that, but you need to have some skills, like you need to have a bare minimum programming skills, some level of statistical skills, and a little bit of backtesting and optimization knowledge in AMI Broker. Right? So that don't ever try to jump with a blind logic, and don't try to burn your finger. That's what my advice is. Okay. Okay, there is one more question from Mr. Sanjay Joseph. This question is, whatever orders we use, that means your trading cost is going higher, whether it is bracket or spread order or cover order. So it is better to use normal or MAS order. Am I right? Generally, what is the difference between a normal and a MAS order and a bracket order? When one should go for a bracket order, when one should go for an MAS order?
See, it's not only for a cost going up. See, when you're executing a bracket or when you're executing a cover, suppose in a bracket order, a single order I'm able to enter 3 trades. So that's a huge time saving. Plus, obviously, the margins are down.
Yes,
margins are less. So obviously, if I'm trading with 50,000 margin and the same thing I'm trading with 5,000 margin, so our ROI is also affected.
Okay.
Okay. So percentage.
Basically, bracket order use it very effectively.
So cost, looking at only cost will be a wrong way of doing it. Wrong way of looking at something. Cost, maybe it has gone up. It may not be a case for everybody, it is getting executed partially, right? So it may be a case for somebody he's lucky enough or he's trading enough liquid stock like Bank Nifty, hardly there will be times when it will be partially executed. Obviously it happens, that is the occupational risk, right? We cannot do anything. So that's how the environment we are into. Covered orders on that case, the margins are extremely low. Okay, so if we do a proper testing and we have a proper tool and tools are giving accurate signals or proper signals, we can leverage using it, using a covered order. MIS order is a normal order, so it automatically gets cancelled. Obviously the margins are less, but not as less as covered order.
Okay, so MIS order is also an intraday order?
Yeah, it's an intraday order, but it is not as less as. Okay. In that case, suppose you are placing a normal buy order and again a stop loss sell, or I am putting a selling order and a stop loss buy. Obviously the margin required is also, blocked is also more. Okay. But for a covered order it will be much less. So extra margin will not be blocked for stop losses.
Okay.
So cost is not the only thing to look at. So just look at the things also it is giving us.
There is one more question from Mr. Jayaprakash Nambiya. His question is, what are the pros and cons of cover order when compared to a bracket order?
See, it's not, you should not be comparing those two. Majorly why? Because bracket goes with a limit with both side protection. Where covered is market with only a stop loss. With the objective is very less or very low margin. Right? So it's not something which is inter-replaceable. It has its own this thing. Suppose you have a trade where you want to block both sides and then you want to get in. You have to have a stop loss also or bracket order, and you want to get into the limit or put zero and immediate execution, or you want to go for covered only when we have a stop loss protection. You don't have a target. Target again you have to input or type in manually.
Okay. There is one more question from Mr. Sanjay Joseph. He's asking why majority of brokers are using Nest Trading Terminal since the supplier Omnizer's technologies service is not comfortable. Recently, they had an data table problem which looks almost a week to resolve. So, his question is why most of the brokers are going to Nest Trading Terminal system. So, mostly my answer to the question is, Sanjay, the brokers, those who are adapting to Nest Trading Terminal are predominantly of discount brokers. So they want to save a lot of cost. They cannot put an in-house team like a very big brokers who can afford for such a huge cost. It's really a painful for brokers like discount brokers like TradeGenie. So what they do, they'll go for a ready-made product. Since Omnisys is currently acquired by Reuters, there's a lot of authority in the trading terminal, and the fastness in the Nest trading system is highly amazing
compared to other
providers, trading terminals. So that's the reason brokers go for a Nest Trading Terminal, and now is even far cheaper than Nest Trading Terminal. Nest now currently is only available for NFE cash, derivatives and currencies. M6 is not there, right? M6 is not there. Whereas in Nest Trading Terminal, all the exchanges are available. NSE, BSE, NSE FNO and MCX are available. Right? So cost is the main factor here. And there is a question from Param Jairam. Is any TradeGenie branch in Chennai? If yes, how I can have contacts? He's asking for an contact in Chennai. Okay,
as of now we have only one branch that is in Bangalore.
Okay. So like, okay, if you want to contact Param, you can contact the customer support team directly. Otherwise, you do have any offers for the participants for today?
We open accounts online also.
The offers. Do you have any offers?
Yeah, this is the offer that we are running right now. So, for this webinar participants, any person who opens a trading account gets 2,000 worth of brokerage credit. Means till 2,000 rupees, no brokerage will be charged to you, and this 2,000 rupees will be valid for 6 months. Till 6 months, until this 2,000 rupees is over, whichever gets over faster, no brokerage will be charged.
So
at 20 rupees.
$100.
$100.
$100.
Yeah, basically $100.
Okay. do you have a trading competition, anything coming in the near future?
We are planning, but as of now, nothing is running. So we'll keep you posted if anything comes up.
Okay. And Jitendra Thakkar is asking, do we get commissions when we refer trading accounts?
Yeah, we do provide commissions.
Okay. Probably, Jitendra, if you're interested, we can take it offline. So let me switch on to the next question. How does there is a question, can we place basket order for options? Is it possible to place basket order for options?
Basket order, yes, is possible.
Okay, what he's meaning is basically multiple orders like a butterfly or an cover order. Which order I have to use it?
See, if it is till option 3-legged position, obviously that will solve the purpose.
Okay. So the
spread order 3-leg will solve the purpose. So which involves more than 3 legs, then basket is the only option.
Okay. So there is a question from Vivek Brambe. What he's asking is, Stretching is a partner broker with Symphony so that he can do a fully automatic trading. Vivek, Trajin is currently in talks with Symphony FinTech, and the process is going on. It's not yet decided. Once it is decided, probably you may able to do an fully algorithmic trading.
As only possible with Symphony and Symphony partners.
Okay. Jitendra, there's a question from Jitendra Thakkar. He's asking, the real-time data on Nest trading terminal is delayed. Is it so?
No, it's not.
No, it is not.
That is maybe on somebody's own network connection, but it is not so.
Okay, probably Jitendra, if you're using in an 2G network, probably if you're using too much of watch list in your screen, it may get delayed. But I recommend to go with a minimum of 3G or broadband kind of speeds. So basically, the latency is the best part in Nest trading terminal.
Actually, compared to anything else.
Compared to any other brokers, Nest trading terminal, the latency is the very best part, and the order execution is another very best feature. Right? Is there any zero brokerage charges scheme? Devanshu Dani from the
that is what. See, this till 2,000 rupees, you will not be charged any brokerage. So that's actually 100 trades that you get free. So there is no charges apart from that.
How about after I want to trade after 2,000 rupees?
After 2,000 rupees, it will be 20 rupees per order.
Per order, okay, nominal. Okay, so we move on to next question. Please explain what happens at the last hour of the market when neither square off nor stop loss is hit by 315. What will happen?
For both on bracket and cover, it will be automatically squared up from our side.
Okay. How about if it is an intraday order and people want to carry forward?
No, not possible. There is no position conversion is not there. It
will be automatically squared off.
Okay. By our system, that is not manual. It is automatically processed in that way. It will be automatically
squared off by 315. Okay.
315 max 320 it will be automatically squared.
Okay. And let's move on to next question. There is one more question from Ravi Shankar Reddy. Can we place the trailing stop loss at the end of each nth minute?
No.
Okay. So Mr. Ravi Shankar, basically, that kind of feature is not there in with any of the brokers, basically. His question is, at the end of every 5th minute, check the LTP, and if the value is below stop loss, execute the order. Is it possible? No. Okay.
All three goes on simultaneously. If something is pending, you can re-modify it.
Okay. Can I modify the trailing stop loss order?
Yeah, you can do.
Okay. So it means like every time I have to modify it.
But it is only possible only when it is not executed or trailing itself.
Okay.
So that way it is not possible.
Okay. So my other question is, what if I am placing a limit order, the order is not getting executed? Does that order will be counted as a brokerage?
No. If it is not executed, there is no question of counting as any
brokerage. Okay.
It's not possible.
Okay. So yes, let's move on to next question then. He's asking, Param Jairam is asking, is there any preset order like an iron condor kind of order is possible?
You don't have any templates as such,
okay.
But you can go to spread order 3-legged, and you can do condor, butterfly, diagonal, whatever you want.
Okay. So basically, I mean, they have to pre-fill. I mean, there is no pre-fill available.
Yeah, no template as such. Okay, condor means it will be done. Okay, straddle means done. No, you have to manually understand straddle, then select the strike prices, and then you have to press submit to execute that.
Okay, so there's a serious challenge over there. I mean, if a preset order available is there, it's available readily. I mean, the option traders can take advantage of that.
So maybe a time would have been saved, but this is not possible.
Okay. There's a question from Jitendra Thakur, like, are there any fixed monthly brokerage after 2,000 rupees? Is there any fixed brokerage you just charge?
No. It's you trade or you don't trade, 20 rupees per order.
Okay. What after the offer is over, every order will be treated 20 rupees per order, regardless of the size of the order. Okay, great. And there's one more question from Vivek Bambre. Who else other than GFDL can provide semi-automatic or automatic trading code for Nest Plus, API and AMI broker? Vivek, my answer is if you are using a different data vendor, you don't need to go for an GFDL plugin. If you are a little bit comfortable with AFL coding and .NET, I mean, you can go through the Nest Plus API. So they provide a set of functions for AMI broker. You can put it into your AMI broker and you can start using it very readily. I mean, Kapil said, I mean, True Data will provide. So there is one more data vendor called True Data. Probably they will be providing the Nest Plus API for AMI broker. And let's move to the next question. Suman Kumar is asking, square off at market rate available for options. Can we square off options at market order using in market order? Square off is generally
square off will be always at market, right? Or else if you want, after the order is there, it is displaying, you can just select that and go to exit, and you can even execute it. It will be executed at market order.
What his question is, basically when we place, I mean, in options there is no concept of market order, right? Only we can place a limit order. So while doing an squaring up, it will be treated as a limit order or it will be treated as a market order.
Option market order is possible, but we have disabled this only for a specific reason. Sometimes option has illiquidity problem. And because of that, few customers who are not very thorough with market, they go and do deeper in the money or out of the money, and because of one trade, they lose 50 rupees, 100 rupees just because of that sale.
Yeah, it's a very valid point.
Yeah, I mean, so that's why it's not allowed.
So basically the broker disables the functionality to avoid retail traders loss in case of extreme bid or ask
price difference. So executing as a market order is not a very difficult thing. You enter as limit in the market price or the price level, you put 0. It will be treated as a market order only.
Okay. So that is a very lengthy question from Prabodh Saha. This question is, for a bracket order, if the primary order gets partially filled, does the other two leg get adjusted automatically? Also, at the last hour squaring off, do you square off at market price? At what time of the day? What if you square off fails?
Now square off won't fail because that is on our part. If it fails, it will be liable for that, right?
So liable for the broker. Okay.
So obviously, our system is so robust, it will not fail. Now, for the primary question, if the primary order is a limit price, so it will be always filled at that price only. So, and it will have the same order ID. So there is no question of being filled at multiple price levels. So the brokerage for the initial order, whatever quantity will be, is fixed at 20 rupees. Okay. Now the problem may arise on the stop loss or the target order. Right there, it may be a case. It may be partially or multiple time exceeded at a different level because of stop loss.
So it means like if the complete order got filled 4 times. I mean 4 partial orders. Means each and every order will be treated as a single individual order, right?
No, primarily it will be 4 parts or 10 parts. It is the single order ID, right?
Okay.
And we are putting a limit price, right, for the bracket order, for the primary order. So it will be, no matter how many portion it gets broken, it will be treated as a single order. So it will be only 20 rupees.
Okay.
Now at the time of exit, it may be a target exit or a stop loss exit. There may be a case because of trailing or any other reason, it will be executed at 3 different levels, 4 different levels, multiple price levels. So every price level it is getting exited will be treated as a new order. So if it is exited at 4 levels, it will be 4 different orders. So primary 20 rupees order and another 4 orders. So 4 plus 4 is 80 plus 20, total brokerage of 100 rupees.
Okay. So whereas in cover order there is no such kind of.
So this problem normally arises when this multiple prices happen only when somebody puts trailing stop loss.
Okay.
If the trailing stop loss is not there, we are normally a single stop loss exit and a target.
So probably in high liquid there is no, maybe one or two.
Maybe except for exceptions, normally you won't get multiple strikes.
Okay, great. So do we have any other questions? I mean, if you have any other questions, you can ask Mr. Abhishek. Otherwise, probably we almost done for the day. And there is one more webinar coming up on April 11th. I mean, on Saturday it is more concerned on super trend and filters. So probably it's even more exciting concepts. We'll be speaking about it. And yes, I mean, Abhishek, you want to say anything to the audience?
Thanks for your time, and it was great having you guys.
Okay, one final question. I mean, there is it's from Karthik S. He's asking stamp duty for Pondicherry. So the stamp duty for Pondicherry is typically, I mean, is it Tamil Nadu stamp duty same, or
it will be union territory?
It will be union territory, right? I mean, okay, for union territory, Karthik, yes, probably we can check with the broker. I mean, probably he will be ready to explain you about stamp duty for Pondicherry. So there is one more question from Vivek.
Karnataka applicable. So stamp duty will be Karnataka applicable.
Okay, stamp duty for Pondicherry is Karnataka applicable. It is not Tamil Nadu. It is for I mean, where the brokers headquarters is.
Because it's a union territory.
Okay, great. So Karthik, the answer is, I mean, the union territory stamp duty is here. Where the broker is located, their headquarters, according to that, you'll be charged the stamp duty for that. In Karnataka, it is 50 rupees. Is the max they will charge in a day, right? So whatever be the turnover, it will be 50 rupees. Whatever be your transaction charges.
Yeah, Prashant will be posting the recording for sure.
Okay. And Raghunath is asking, are spread orders executed as market order? The spread orders can be, is it a market order or a limit order?
That is very much possible. You can select it from there itself.
I mean, there is a provision to execute both as a market order as well as a limit order. Okay. I mean, Raghunath, I mean, yes, spread order can be executed as a market order as well.
But because for pair trading and all, we want to do it immediately, so the limit doesn't make sense because.
Yeah, that makes sense.
Right.
And there is one more question, like your super trend seminar is filled with. It's yes. I mean, Prashant. I mean, I don't have any control over the participant. I mean, in a very short amount of time, the webinar has been got filled. Anyways, the recorded webinar will be available in YouTube. Probably, I mean, just stay tuned to our website. I mean, we'll be posting across in all our social media channels once it is once the recording is done and the webinar is done. Will you at least publish the webinar on market cause? Yes, Vivek, I mean, whatever the webinar we are doing, we are regularly publishing it. And yes, I mean, we almost come to an end of the game. So if you have more questions, we can ask you here, either here or you can ask outside the webinar. I mean, do you have any contact number to share if people want to open an account and how it is? Maybe we can post it over here. Okay. Okay, it's 08040204020. Can anyone is willing to exercise your offer? You can note down the number. Yes. Oh, thanks, Vasant. So everyone, we come to an end. So thanks everyone for your time and watching it very patiently. And thanks once again. So meet you in next interesting webinar, right? Thank you.